Hello everyone, I'm Anuj Choudhary, research analyst at Mera Asset Sharekhan, and I'm here to guide you through the many eventful developments taking place in the commodity market. In the video, I will be covering the crucial price ranges for crude oil, gold, silver, and copper. So watch till the end. To begin with, let's take a look at crude oil. The recent rollercoaster ride in oil prices had led to market sentiments to seesaw wildly. Brent crude oil prices spiked 28% to just under $120 in early Asian hours on Monday. Risk sentiment rebounded dramatically on Monday after President Trump hinted that the war with Iran could end soon as they have met their military objectives. He also announced waivers for oil sanctions on Iran and plans to deploy the US Navy to escort tankers through the Strait of Hormuz to stabilize energy markets despite successful military operations targeting Iran's missiles and drone capabilities. Crude oil prices tanked to around $83.60. However, they can remain volatile on incoming statements from US and Iran leaders and developments in the Middle East. Though the Strait of Hormuz remains officially open, traffic is expected to remain low. Oil production is also expected to remain weak and should take a couple of weeks to restore the pace of output. Technically, crude oil has given a trendline breakout and is trading above the moving averages. However, the momentum indicators have shown some weakness as the RSI has started to fall from the overbought zone. We expect crude oil to trade in the range of $80 to $100 in the near term. Next, let's recap significant happenings in the global markets. Global equities rose following Trump's statement. The Dow Jones Industrial Average, the S&P 500 and the Nasdaq Composite Index rose 0.5%, 0.8% and 1.4% respectively. The US dollar index fell from 99.7 to 98.7. The 2-year treasury yields edged down 2 basis points to 3.54% and the 10-year yields fell 4 basis points to 4.1%. How are the precious metals faring? Gold and silver prices recovered from previous week's lows basis a softening US dollar and easing US Treasury yields. However, near-term outlook remains weak amid reduced safe haven demand. Markets will look out for fresh triggers for any major pullback. Expectations that the conflict may conclude soon continue to weigh on bullion, and we anticipate a potential decline towards $4,800 once clearer signals of de-escalations emerge. However, Trump has acknowledged unresolved issues with Iran's leadership. Any fresh escalation may induce safe haven appeal for bullion. Technically, gold has consolidated over the past few sessions and is trading near the moving averages. The RSI is also showing weakness unless we see a crossover. We may see gold trading in the range of $4,800 to $5,400. Silver is also expected to trade in the range of $80 to $94 in the near term. Finally, a quick look at copper. Copper is expected to recover from lower levels as China's trade data surprised the street. China's export growth accelerated in January and February period, keeping the world's second largest economy on track to surpass its record $1.2 trillion trade surplus for 2026. Outbound shipments rose 21.8% year-on-year, a sharp increase from 6.6% expansion recorded in December and above the forecast of 7.1%. Technically, copper has taken support along the trend line and is trading above the moving averages. The momentum indicator RSI has also given a bullish crossover, signaling further strength in the red metal. We expect MCX copper to trade in the range of 1,160 rupees to 1,240 rupees in the near term. In a nutshell, markets in the near term will remain highly reactive to geopolitical developments in the Middle East. Investors are advised caution and prudence. Thank you for watching our exclusive commodity market outlook. You can now view all our research offerings, including detailed reports and latest videos on Mera Asset Sharekhan Research Center. Visit www.research.sharekhan.com to explore. Thank you.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.